Okay, like I said before, I started the record button. Um, I get asked a lot about how I invest out of state all the time. Most of my investments from the real estate side are out of state. Um, for those that don't know me, I started a company with my college roommate. We started investing in Milwaukee, Wisconsin. Neither of us are from there, live there. And besides David, my business partner, his wife is kind of from the area. Really had no ties to it. So a lot went into kind of building out a team and deciding on a market. And I'm going to talk about both of those today. And we continue to, we own property there, quite a few properties. I've invested in some other locations, kind of using these same strategies. And so I just wanted to kind of work through that today for for you guys on the call, and then for the recording that I'll post afterwards. So let me share my screen here, and then we'll get into it. All right, I'm gonna do this. Can you guys see it? Okay, give me a thumbs up. Cool. And so for Nick, I know you own property. I don't know if it's local or out of state.
All the
What's
above.
okay? Cool. And then Brett, how about you? Do you own any real estate?
No, just the house that I live in.
Okay, cool. And Rob, I know your background and story there too. Um, and okay, so out of state investing. This is what we're going to talk about today. Basically, how to build a team from an out of state, another location. And then if you're starting from scratch and you don't really even know where to begin, how to maybe look at some, analyzing some locations to kind of figure out where you want to even invest. Some of this is fairly simple and makes sense, but I think it's good information altogether. Okay, so core four, these are the four essentials I believe that you absolutely have to have on your team. Call them the deal finder, the property manager, the contractor, and the lender. And I'm going to kind of go through those one by one to talk about where to find them and what they're good for. Deal finder. So obviously, I personally think this is the most important person on your team, and this is the person that you need to start with. I think if you get the deal finder, and if the deal finder is kind of what we're talking about here, they will lead to finding the rest of your team. Um, Most people think that that starts as a real estate agent, and that typically probably is the case. But not all real estate agents are the same, and so you really need to find a real estate agent that is an investor themselves, or like specifically works with other investors in the space of helping finding off-market deals, rental properties, stuff that needs work, and has that mindset as an investor and not just a typical realtor who's trying to find a house for you to live in. Big difference there between real estate agents. Wholesaler, I think wholesalers are also very, very important to help you find deals. For those that don't know what a wholesaler is, basically it's someone who does a lot of marketing, sends out leads, knocks on doors, does mailers, does flyers, tries to figure out like where the pain points are of people that are underwater on their houses. They need to sell. Maybe they got, behind on their mortgage, like lots of issues with people trying to get rid of their houses, but they'll basically go in, get a house under contract, acting like they're going to buy it, and then they will assign the contract to somebody else for a fee. Typically, that's 5,000, 10,000. Some even get 25,000 or more, depending on how steep of a discount they get on it. But getting on wholesalers lists is a great way to just have deals come to you all the time. And I'll show you kind of how we did it, and where you can find them. Bird dogs, similar to wholesalers, but they don't go through the process of actually like trying to get it under contract. They'll drive neighborhoods, they'll look for houses that maybe have like tall grass that are not kept up. They'll get an address and then they'll just like send it to you. And then you kind of have to do the work to find the owner, talk to the owner, and then get it under contract. But still a great person to have on your team out there on the streets looking for deals, finding properties for you. And then obviously yourself. Um, It takes a lot of effort. It takes a lot of time to find deals, scouring the market, driving around, doing all that stuff. So I personally, I don't look for deals myself. I have team members. I have people that are helping me, sending me leads, finding deals for me. They know, the buy box of what I'm looking for, and I just like get stuff sent to me all the time, to my inbox, to my email, or like a text message or something like that. So, Deal Finder absolutely must have in the team. I think it's the most important. I think it's the one you should go after first. They are the ones that are going to get the referrals. They're the ones that have the market knowledge. They're the ones that can negotiate, price points. They're the ones that have the connections. Typically, if it's an investor, they're going to know contractors. They're going to know property managers. They're going to know handymen. Again, great asset to have on your team. And again, out of state, like they're going to be your eyes and ears. They're going to be boots on the ground. They're going to be one there in your market, driving the neighborhoods, knowing which, street is good and which street's not good. And a lot of the cities where I've invested, like that literally is the case. Like one street will be great to invest in, and then like, across the main street on the other side, like it's terrible. So you have to have someone on the ground that's going to know that stuff for you. Here's some places that I start. Again, if you're starting from scratch, um, I think Facebook is a great place to start. There's tons of groups, Facebook groups. So this one right here, the Colorado Real Estate Investor Network. It's a Facebook group. And you can go to the search function and search in whatever city that you're thinking about investing in, and search for, Philadelphia real estate investors, or Philadelphia investor group, whatever, city you're thinking about, and like add investor to it, add network, add real estate, something like that. Search that, and I guarantee you're probably most of the major cities are going to have some type of Facebook group where investors hang out and talk about real estate, about investing. That's a great place to start. Again, Facebook, real estate investor associations, they call them RIAs. Again, most major cities are going to have them. And they like meet in person. They have actual physical meetups, typically weeknights. You can go and network with them, meet them. A lot of them will have some type of fee or a membership, for the annual fee or something like that. But great place to if you're traveling, if you're an airline pilot, many of you guys might be airline pilots, you're flying to locations. Hey, if you're out for the night, go, find a local real estate meetup group, RIA, and check it out. Bigger Pockets, huge website on all things real estate investing. They have local forums. This is just an example of the Denver Real Estate Forum. You can find the forum that you're considering for that area, and then just like get in there and like see who's posting a lot, right? See who's an expert in the area. See who's commenting and making posts and very active in that. And you can start to kind of figure out who's who in that area, and then reach out to them and start having conversations with them. Meetup.com is another great place that I've found, deal finders and people for your area. Again, these are typically like in-person meetups in your local area. These guys, the badass real estate investors, they do coffees all over Denver. And so you can find, local in-person meetups by meetup.com. There are people that post like Zoom meetups and virtual meetups on Meetup as well. So another great place to find deal finders. All right, deal or person number two you need to have on your team is a property manager. I personally feel, again, if it's out of state, like you're going to have somebody watching over your property, managing, the renters, managing maintenance, everything like that. And again, property managers are not all the same. They don't just collect rent and send you statements. They're highly knowledgeable, immediately connected to the business world in that local area, who they make a living off of real estate investors. So they know a ton of real estate investors. They can also be your deal finder, right? They know when an owner is a tired landlord and like that landlord just wants to get rid of their properties, right? That's someone that could probably help you find deals, and know your neighborhoods, know your markets really, really well. they are good people to help you buy deals. But again, like I said, property managers are not all the same. This is a really good YouTube video. I'll copy it and put it in the link on the show notes there once this is done. But this is a great video of like questions to ask a property manager. And there's lots of things that you need to learn about, understand how they operate, from their fee structure, the number of doors they manage. Are they investors themselves? Do they own properties themselves? Just their mindset and their, like, are they like a team mentality? Do they charge you for every little maintenance nook and cranny? Do they upcharge you on, the materials? Like lots of stuff to ask and realize, like, how they're making money. So this is a good video. I'll put it in the chat afterwards. And you have to manage the manager. I don't think there is any investment real estate related that is completely passive. If you got to build this business, you're going to have rental properties, you have to manage the manager. You have to talk to them, ask them questions, engage with them. And I say that because I've made that mistake. I've been completely passive in the past, where I don't ask questions, where I just wait for a statement to come in. And that's how you get yourself in trouble, because if they don't see that you're, doing, yeah, Rob, unless you do DSTs, very good. Very, very true. So yeah, you gotta manage the manager. Contractors. I personally think that this is the hardest one to find. And referrals are absolutely key in this area. Again, the top two: realtors, deal finders, property managers. They're going to know contractors, but they're still hard. They're still hard to find, and they're still hard to keep. I've found that keeping contractors are just as hard or harder than finding contractors. So you gotta keep them busy, you gotta keep them engaged, and you gotta pay them well. One of the things that we did was drive for contractors. Literally, we'd have some of our team like drive the neighborhoods of where we're doing deals, and like see, you'll find another house that like someone's working on, and go like up to them and like, hey, can I get your business card? And then we'll talk and call the contractors later on and like have conversations with them and see what they're doing, how many deals they're doing, and if they're busy. And we're always trying out new contractors, seeing if they're going to work out. Sometimes they don't, sometimes they do. So you got to always be looking for a next contractor. And that comes with having your team, boots on the ground, your realtors, your deal finders, your property managers helping you all the time. You have to have basically a running list of contractors, handymen at the ready for your properties. Lender. This is the last one you really need on your team, and you need multiples of these as well, kind of like similar to the contractor. They're easy to find until they're not. They're easy to find until you have 10 or more properties. You start investing out of state, like we're talking about here. You don't have a 720 score. You don't have a W-2. That's kind of a current situation for me. Is after I retired from the military, I didn't go to work for a W-2. So like, I don't have any type of steady income to show that I can just get a regular loan from. So it's challenging. So again, easy until it's not. Other investors, other investor-friendly agents, the realtors, property managers, investors in your network, they're going to be your best source for lenders. You get to a place where you're not going to buy properties out in your own name. You're going to buy them in an LLC, and you're going to do commercial loans, portfolio loans, DSCR loans. That's where like investors who are doing this on a regular basis and getting, connected with them and in your network, those are going to be your greatest resources for finding these type of lenders. Every lender is different. Every lender is going to charge you different fees and points and structures and terms. So you got to really just kind of figure that out and be aware of who in your network can help you when you're needing these. And I'd say like make these relationships early and often. Ways to fund the deals. This is kind of in the lender space. Obviously, like the big banks, Chase, Wells Fargo, these Fannie Mae, Freddie Mac, those are going to be your lowest interest rates and best terms. However, you're going to have to use basically your personal assets, your income. The loan's going to be in your own name, so you're going to have to buy the property in your own name. Those are going to be the best rates and terms for you for sure. As soon as you get like past the 10 property portfolio, and you're buying stuff in your LLC, and it's no kidding, like an investment property, you're gonna have to use maybe some like local banks, investor-friendly banks. There's like portfolio lenders, commercial lenders that are doing debt service coverage ratio loans that are basically just for rental properties. Um, Still decent rates. They might charge you some points and some fees, but still pretty good. And then, my favorite are private money lenders, family, friends, and they could be, pretty good rates and terms too. But if you're working with other investors who are kind of doing this on a regular basis and they use this as a business opportunity, they're probably going to charge you more money. Syndications, you can raise money from friends and kind of like partner on deals where like they're getting like a piece of the equity. And then there's hard money lenders. Hard money lenders are like actual businesses that will charge you money for buying these type of properties. They're going to be probably your most expensive and probably most challenging to get through and use. They do a lot of due diligence because they don't know you. And they're going to charge you way more money. Any questions on that so far? Any comments? I'm just gonna, anything so far? Nick, Rob, Brett, good? Any experience that's
all along
different?
great. Thanks.
Yeah, I think you hit the nail on the head for all of it. You're spot on with absolutely everything.
Cool.
Especially the contractor pain point.
Yeah.
Oh man, it's the worst. The worst. All right. So yeah, so rock stars know rock stars, right? Like I think like you have to be engaged with like good, solid people within your network, within your business. And, a great deal finder is going to know a great property manager and going to know a great contractor and know great lenders. So you got to find those people, and it takes work. It takes time. You're not going to find it overnight. You're going to find some successful people and some not so successful people. So I think the key here is just trying to surround yourself with as many good people doing what you want to do. All right, so I'm going to change focus a little bit and talk about an analysis of a location. I personally think that the team is much more important than the location. However, there are some locations that are going to be, important to think through, right? As far as, price points and, city laws and state laws and legislature. Like there's some things that, landlord friendly versus tenant friendly, taxes, lots of stuff to consider. But again, if you're starting from scratch and if you're, if you live in, if you live in New York City and it's really, really expensive, or if you live in LA, or if you live in some place like where it just doesn't make sense from like a cash flow perspective, or, if it's not meeting the criteria of what you're looking for, this could be a good place to start. So we looked at this stuff when we were picking locations. We picked Milwaukee, Wisconsin. There are some challenges with Milwaukee, I'm not going to lie. But a lot of it did meet some of this criteria. So I'm going to run through it real fast. Stop me if you have any questions. This was from a presentation. This isn't my information. I took this from a presentation that I watched quite a few years ago, but I still think it applies. So focus number one, population growth. Obviously, you want to be investing in a location where it's growing. For population, 250 to a million, you want he was saying, hey, you want to have a target of 21.25% population growth. And he used basically just Google. Like you can look up on Google and search population growth of Denver, Colorado. And like there's no kidding, like a graph, and you can like look and track it, how it's tracking. Here it is. So Denver, Colorado population. You can look at Google and you can see, the graph of how it's been performing, and if it's growing or not. So you want to be investing obviously in a place where it's growing, not declining. That seems okay. Number two, median household income. Again, you want to look for growth. You want to look for the median household income to be growing in any location that you want to be investing in. A great resource for this is called City Data, citydata.com. Tons of information on cities, big and small, and you can kind of dive into the details of a median household income. And see how that applies. So 31.5% income growth between, a 3 to 5 year gap. is going to be giving you a good data set of whether this is the location that you want to be investing in. Value, similar. You can use city data again to check out like how the value of property you want to be increasing in that as well. There's markets where it's going to be a little bit more focused on cash flow. For us, we have been focused on Midwest markets. There's not going to be as much of an increase in value in the Midwest, but it's going to be better cash flow. And then obviously, if you're going to get on, any of the coasts or like the big markets, like, Texas, DFW, Phoenix, Denver, like some of these bigger markets, there's going to be a ton of probably, growth meeting household condo value, but it couldn't, maybe there's not as much like cash flow in those markets. So it depends on what you're looking for, how you're wanting to invest. Are you looking for cash flow or are you looking for appreciation? Just a good thing to look at. Again, you want to be investing in places where it's grown. Crime levels. We made some mistakes in our investing early on of different neighborhoods in Milwaukee. Similar to any big city, there's going to be some really bad spots and some really good spots, and a lot of quote unquote turnkey companies are going to probably try to send you to some bad areas of town. I made that mistake. I invested in Birmingham, Alabama, and they told me it was like B plus or C minus neighborhoods. Come to find out, it was like in the ghetto, and it was like D class neighborhoods. And cash flow was great until the end of the year when the tenant moved out and they trashed the place, and any cash flow you did have all just went away because you had to rehab it, and it was absolutely terrible. So crime levels, super and super important. Again, city data, you can get super granular. Like you can get into zip codes, and even like you can get into zooming in and focused on streets, neighborhoods, etc. to like look at, crime. You can see on the map there, it's very interactive. You can look at, it's all like color coded, and you can see kind of where all the crime is. So super important to look at when you're trying to find locations, neighborhoods, etc. in the cities that you're investing in. This crime score is something that city data uses as like as a marker for like kind of good and bad. So this is saying, hey, try to get below 500 on your crime score. Okay, job growth. This applies to kind of to everything else, right? You want income growth, you want median household growth, value growth, population growth. You want job growth. You want a city where there's going to be more jobs. A great resource for this is Department of Numbers, and any and all major metro areas, cities. It's going to show you what the jobs are looking like in your area in the city that you're looking at. So you want to have a 2% growth year over year in jobs for the Department of Numbers. Okay, any questions on that? Kind of the highlights of analyzing locations and building a team.
Just one quick, especially for the on the last sort of market analysis.
Yeah.
How do you normalize for COVID? All the slide you put up was for like 2016, and obviously the COVID values exploded everywhere all at once.
Yeah, for sure, man. I mean, so my style of investing has always been for cash flow. And so, I take all of this somewhat with a grain of salt. Again, I think the team is way more important than the location. And then I think that just numbers from a purchase price versus rental price, and running the numbers from analysis of like, what's my income minus all my expenses minus my mortgage, all that kind of stuff. I'm analyzing that and taking that into heart probably a little bit more than this location analysis, right? Because you're right, everything has increased over time, and if you look, recently stuff is starting to drop off a little bit, and it's actually stuff is like starting to drop. Now, am I going to invest in a down market? Sure. So I'm going to invest more. I'm going to look more at the numbers from the cash flow analysis and relying on the team than I am, this information. That said, I still want to make sure I'm not in a really, really bad crime area. I want to make sure that I'm still in an area where hey, there's still going to be job growth, right? Maybe it's not as high as it used to be. I think values are a little bit inflated by everything. So I think, take that a little bit more with a grain of salt. That's my personal opinion. I don't know. Do you feel any different?
No, I've seen a variety of different folks talk about these same similar sort of metrics, and they all make sense to me until like 2020, and then like
Yeah,
everything broke, right? And I haven't had anybody talk about it since then, and like how they're factoring in that weird blip into this analysis. I mean, at the end of the day, I'm not necessarily looking for a new market, but it's interesting that I have been trying to sort of quantify my markets, especially when I'm considering whether I should invest, in where I have a team over here, or should I invest in team B over here in this market, and trying to come up with that relative analysis has been sort of on my plate, and I haven't I don't feel like I'm there, if that makes sense. But this is all
yeah,
stuff that a lot of it I've seen before. I like the numbers are interesting, but like I said, trying to normalize that for what's been happening with COVID
for
is
sure.
challenging.
Yeah, something that is not on this presentation, the slide deck, that and I'm just going to exit out of this real fast. Just so I want to discuss this more, Nick, but just if anyone's like, so this was kind of like action items that I gave to my coaching group. But if this is stuff that like you're wanting to plug into and like, take action on, right? Here's just some stuff that you can like after this call, maybe rewatch it and like do this stuff. Like join some of these Facebook groups. Like find some areas, engage, right? Like if you want to get on email lists, get on wholesalers lists, post on Facebook in that group and be like, "Hey, I'm new to this group. Would love to connect with you guys. Looking to get on buyers lists, or I'm a buyer. I'm looking to get on your list, right?" And give them your email. And like, dude, you're gonna get exploded with emails, which could be a good thing or a bad thing. But I get emails. I probably get 30 to 50 emails a day from the markets that we used to invest in, from Milwaukee to Texas to Dallas, like to Denver, like Colorado Springs. I get tons and tons of emails. Most of them I delete, but you can start looking and get an idea of what prices are and who's like a good wholesaler, who's not, right? And then like actually make phone calls. Like, if you're looking on the Bigger Pockets forums and you see this one realtor who's like posting all the time, hey, connect with that person, right? Get on the call and like talk to them and like tell them what you're looking for. Maybe have them start sending you deals. And then just maybe use some of these numbers and analyze 5 markets. Nowadays we have Chat GPT and it makes it really, really easy, right? Like you can plug in Chat GPT and be like, hey, give me the 5 top markets that have this much growth in value and, crime and, whatever, right? Just pretty easy. Like it can spit out you five markets really, really fast. So those are some action items for anyone that's watching this in the future. If you want to like, no kidding, like do some of this stuff. I'm gonna stop sharing and then um, we can talk more about it. So Nick, I agree. So one thing that a couple things that I didn't mention in this presentation that I think is also very, very important that I kind of mentioned ahead of time was um, obviously the team is important, but like there are some things that we've figured out with Milwaukee and like COVID was hard on us because of like the renter moratorium and like dealing with tenants that don't pay. And Wisconsin in general was started to lean way more towards being friendly towards the tenant than the landlord. And if they didn't pay for a month, then you had to like take them to court, which you had to do a court date, which was then like 60 to 90 days out, and then you had to wait for the court date. So there's like 3 months of them not paying. And it got really, really challenging. Now we still have properties there. We still have a large portfolio there. It doesn't force us to sell, but it did make us really think like, do we want to keep on buying here? So, local laws, city, landlord friendly versus tenant friendly, taxes. I know, we used to own quite a few properties in Texas, in the Dallas metro. Property taxes have gone bonkers there, right? And I don't think it really makes sense to own rental properties there anymore because just the property taxes kill any cash flow that you possibly have. All right, so like the cash flow analysis, the local laws, the city. And so, I still like the Midwest. So I've just changed states and, looking at some different states that are way more friendly. Indiana's way more friendly. Pennsylvania is way more friendly. There's some other Midwest markets that are a little bit better as far as like landlord tenant laws and, taxes and insurance and stuff like that. So definitely more things to think about than just, what we talked about here. So,
Yeah.
Nick, you're Georgia, is that right?
South Georgia, yeah.
Okay.
Columbus.
Columbus. Okay. And how are the law? I feel like they would be pretty good there. Pretty good.
Massively landlord friendly. In
Okay.
fact, the legislature just this last year clamped down on squatters in a big way. So now we can get law enforcement involved right away, get them out of the property
Okay.
instead of, some of the Northeast is notorious for letting squatters stay for years and, never taking them out. And now it's just done. If I want a tenant out for any reason at all, just because I don't feel like having a tenant anymore, I give them a 60-day notice and they're gone.
Nice.
I mean, that's unheard of in a lot of parts of the country. So it's super, super landlord friendly,
That's great.
which just gives you a lot of flexibility. Not that,
Yeah.
I mean, I don't want to use any of that, but it's nice to have those tools in your tool belt.
Yeah, for sure. I love that, man. Pierre, you jumped on after we started. Where are you coming in from? Where are you located? If you can talk. No? Um, okay. So I had mentioned, I think like in my email and in my post that I was going to give away some meal cards. If you guys put in the chat your emails, I will send you guys like this like discounted meal. It's like a Groupon. So it's like a $50 Groupon. It's dining card. So you get like deals for restaurants all in your local area, and you can use it. Get like 25% off, 50% off. It's pretty cool. I use it all the time. So put your email, and I mean I have some of your emails, but just put your email in there, and then I'll send you. And it will come from my consulting company. It's called Green Gale Consulting. It'll be an email from Green Gale Consulting if you want that dining card for showing up today and engaging. So I appreciate that. Any other thoughts, comments, questions, where the market's going? I don't want to hold you if you don't want to talk anymore, but that's the end of my presentation. But if you guys wanted to chit chat more about anything going on, happy to stay on and just kind of talk through community stuff. Robbie came off mute. What's up?
Yeah, the landscaper's finally left, so it's quiet. Yeah, appreciate that, Stu. Great presentation. By the way, thank you for the offer for the gift card. That's really nice of you. Totally not necessary, but if you send one over to me, I will pass it directly to my wife, and she'll know what to do with it.
Perfect. Perfect.
But I sort of like when it comes to these landlord tenant issues, like I sort of operate on the other side of it in that, by the way, I'm based in New Jersey. I operate mostly in New York City, as you
Yeah.
probably saw in my last presentation. So I focus more on dealing with landlords, like people that want to basically retire from their real estate. So these laws are very much in the renter's favor. You have a lot of landlords out there that are just beating themselves up. They can't get these tenants out, and they're just frustrated with it, and they're looking to punch out of it. So that's kind of where I try to seek those people out as giving them another avenue to jump on the 1031 and pop out of those things. So I don't really operate on this side of things, but I do hear about the frustrations going on. I used to have rental property myself. We used to have Section 8 tenants, which is kind of a gift and a curse. You have the
Mm.
reliability of the check,
Yep.
but they sort of trashed the place, and we made the mistake of being friendly with them, so they were constantly harassing us and calling us. But
Oh man.
I don't really deal with that side of it. So again, I focus more on people that are feeling these pain points, not able to collect the rents or not able to find the right help when it comes to a contractor. And then I leverage this modular basket of products that I carry basically to solve a couple of problems. But I appreciate all the insights because it's good to know what's under the hood.
Rob, just curious, do you connect with a network with property managers very much? Because I think that could probably be a huge relationship builder and asset for you because they're going to know who those tired landlords are and could be a place where like they send you that landlord lead to then you can talk to them about the whole 1031 exchange process and the
No,
DST.
but that's on my wish list. That is definitely on my wish list. I'm actually doing an event in New York City on November 3rd, and it's aimed directly at building owners. So it's we have like over 100 that RSVP'd for it. So basically, it's kind of my angle. That's my part there. We have a lot of real estate professionals from all corners of the real estate sphere, but my angle is basically finding those building owners that are thinking about popping out of these things, and they've had enough tenants, toilets, and trash, no more.
Yeah.
So that's what I try to find. So to your point, yeah, I'm always trying to seek out those kind of groups. I can always build a better mousetrap. I can always do better than what it is that I'm doing. I tend to do a lot of this, whether it's a one-on-one small group setting or large group setting, because what I do is very niche.
Yeah.
Yeah.
That's good, man. Nick, are you
But if you listen to Stu, he's got some good advice. If you guys are looking, to be investors in real estate, he's hitting on. I mean, I know because what I'm a securities broker, so we pick these things apart. These offerings that we have, they come with full PPMs that are like, well, I'll show you one. They're like that thick,
yeah,
right?
dude. Yeah.
So all kinds of disclosures, and they do their SWOT analysis, and they're looking at all these metrics, right? The demographics and the growth and crime and things like that. So a lot of due diligence goes into it, and Stu is hitting all the right points. Like that's what you want to be looking at. And unless you're getting a prepackaged program, which is something that I deliver, that's all the stuff you guys want to be looking at individually if you're looking to invest in real estate.
Yeah, for sure.
And
man.
that's spoken as a securities broker that has tons of due diligence and layers of security built into these things that try to set up investors for success, which of course in real estate is never guaranteed.
That's right.
Rob, just out of curiosity, one of the things that I'm looking at is trying to find some of those tired landlords or boomers that are looking to get out of their portfolio and move on. And I'm in a much smaller market than you are. How are you reaching out and finding those folks for your business?
Yeah, so I'm always trying to find them because those are the ones that purchase these products, right? But typically I get referred in by what I call their advisory board. So if somebody's doing a 1031 or thinking about doing one, they need certain people at the table to execute that successfully, meaning a real estate broker that's going to sell that warehouse, townhouse, whatever it is, for top dollar. They need a CPA to give them tax advice. They need their real estate attorney to give them the legal side of things. And then they need this thing called a QI, or a qualified intermediary, that holds the funds in escrow. So these are all like necessary ingredients in the 1031. And I'm sort of like a maybe. I kind of come in with another option they oftentimes didn't know that they had, and give them another way out that could be welcome. So to answer your question, Nick, I typically get referred in by those other people at the table.
Okay.
If not from folks like you that just happen to hear of somebody doing a 1031, and they're like, hey, talk to this guy. He calls himself 1031 Rob. How about it?
That's right.
Yeah, I just did my first one this last fall into winter into spring.
Okay.
It was an experience, but I have many more in my future. So I would just, from my perspective, I'm looking for creative finance deals, and folks in that bucket that you're talking about, in that demographic, are the ones who typically going to have the most equity and potentially be amenable and able to do some creative things rather than going through the banks and everything like that. So I was just curious.
Sure.
The finding is the tough part.
Yeah, absolutely. And the 1031 is very much a symphony. I say it all the time. You need everybody to play their role very well. And it is easy to mess up. Everybody gets enamored with the idea of not paying the tax legally. I mean, it's a great thing, but it really sets you up for failure because it's got these timelines that are very short and these rules that are very hard and fast. So, Nick, you've been through this. It's not really friendly. So that's an area where I can be helpful as well, because I'm good as a backup, and I'm also good from that financing angle. If they have bad credit or something's going on there and they need like 65% LTV or something like that, I have programs with that built in at the sponsor level. They don't have to qualify credit wise. So it makes those pain points go away.
It's good, man. All right. With just a few minutes left, we have about 15 minutes left. I want to just take a little bit of time to plug the Military Investor Network. Rob is a part of it, and I think what it does is Rob's a part of the network. He's presented and educated on what he does, and now so like everyone in that network is going to go to Rob if they need any conversation about 1031s, DSTs, anything like that, right? He's going to be the subject matter expert, and that's what I'm hoping to create here, is a space and a place for people to come together and learn from each other, grow, connect, and network and educate. And so just real quick, for, some probably have seen this already. But again, if you guys can see my screen, this is the Military Investor Network. It's on a platform called School. These are, we're growing every day. We're up to 44 members, and they're all really pretty high level investors that are in real estate, are in wealth management, and lots of different stuff going on. So in the community, we're having daily conversations, just general conversations. We have them broken out by single family, multifamily, commercial real estate, passive investing, personal finance, stocks and mutual funds. You can post your deals in here. If you have deals that you're wanting to sell, I posted a cash flowing duplex in Milwaukee not too long ago. Hunter posted about a North Carolina investment opportunity, a multifamily. So you can post your deals in there. Alternative investments, like we're talking about more than just real estate, right? Entrepreneurship through acquisition, gold, silver. Rob's talking about 1031 exchanges, international real estate. So lots of different conversations going on. We talk about some eternal investing. And then in the classroom, we have courses. We have a weekly lunch and learn where someone's signing up and teaching teaching on a topic that they're smart with. We're talking about insurance, international real estate, how you use paid ads to grow your network, investing in preparedness, DSTs Rob taught on, designing investment approaches from a wealth manager perspective, paying your kids through your business, multifamily syndication. So lots of just different going on in the classroom. And then, every week we have a lunch and learn on Tuesdays. And then obviously we have our community call once a month. So lots of stuff going on here. I'm, a little bit biased, but I think it's an amazing group that we're growing. So I didn't want to charge. I didn't want it to be for free because I want people to show up and put their money where their mouth is a little bit. But I didn't want it to be that expensive. So it's $50 a month. I think it's a pretty good price point for what we do and what it offers and what it brings. And then the cool part about it is you can actually refer people. There's a 40% referral fee. So very quickly you can, invite a few people in and that membership is paid for. So that's my plug about the community, about the group. Again, there's a lot of real estate investors, which is my network and who I engage with the most. I'd like to have more investors outside of just real estate, guys that are super smart on crypto, oil and gas, lots of other people. Like, so if you know anybody who is in that space, I'd love for them to join so they can teach and educate and be a connector and a network provider in this space. There's not a whole lot of conversations about like stock and mutual funds, alternative investments, so want to have more people like that in there.
They have to be ex-military though, right?
They have to be military veteran. Yep. They have to be military veteran. And then the other thing that's really cool is I have this program where I get to send people on vacation. So, guys that are engaging and bringing more people in, I get to send them trips. So if you want to go on a vacation and you want basically a hotel voucher for really all over the world, you can be a part of the network, and that definitely pays for the membership, probably for the year. So lots of cool stuff going on here. Again, I love the community. There's lots of engagement going on, and that's my plug. So we got some minutes to spare. Happy to end it here, unless you guys want to chat about anything else. Feel free to jump off if you want.
How many guys do you have in the network so far?
Currently, there's 44 members. Again, all military veteran, and I'd say the majority are real estate investors. We have a few like wealth managers, financial planners. I don't know, Rob, who else is in there? Like a couple insurance guys, life insurance.
Yeah.
Yeah, so it's a good group. Lots of syndicators, multifamily guys, a couple flippers, but yeah, good stuff. Private lenders, quite a few private lenders if you're ever looking for money.
They've done a good job, Stu, of gathering an eclectic blend of folks. I wouldn't say you have it's not all like cut from the same, right? It's you have a lot of different versions and specialties in there, and it's not the biggest. So like you said, 44, right? It's still growing.
Yeah.
But yeah, you do have some very high caliber folks in there. So commend you on
I
that.
appreciate it, man. Glad you're a part of it. So
Thanks, man.
all right. Well, saved you a few minutes. Thanks for showing up.
Thanks, dude. This is
yeah.
Pierre. Just want to say hi. Appreciate it. Thanks for
Yeah,
all the
man. Hey,
info.
if you want one of the dining cards, put your email in there in the chat, and I'll send you one.
Okay. Yeah, sure. Yeah. Thank you.
And I
Cool.
did think of a few folks too I'm going to send your way. So
Cool.
kind of light bulbs were going off, ex-military folks in
Okay.
the investing space. So I'll make introductions to you one-on-one.
Cool, man. I appreciate it. I'm
All
gonna
right, guys.
stop the
Enjoy the
recording.
weekend. Nick, was nice meeting you.
You as well.